Hey, thanks for tuning in to today's video. In this one, I'm going to give you 3 rules for beginning investors. So if you're a beginning investor or you're thinking about buying some stocks for the first time, these are 3 rules that you need to jot down and keep in mind so you can become serious as an investor and avoid some of these huge mistakes that cost other people a lot of money. So our goal as investors should be to make as high of a return as we reliably and consistently can to build wealth over time. So I'm going to give you my 3 rules that I've come up with for beginning investors. And these are mistakes that I have made personally that have cost me money, or that I've seen other people make that have cost them a lot of money. So the first rule I'll talk about for beginning investors is to admit what you don't know. And this sounds kind of silly, but it's really helpful in avoiding big mistakes. So when I say admit what you don't know, I'm talking about, up front just saying, I don't know pretty much anything that's going to happen in the future with any sort of specificity. So I don't know what this certain stock is going to do in the next month or the next week. I don't know what kind of economic news is going to happen. I don't know if some kind of worldwide war is going to break out. There's so many variables, so you don't want to be trying to predict the future, and you don't want to become overconfident in your investing abilities, at least in the short term, because if you don't kind of humble yourself before you get into the market will eventually humble you. So when it comes to investing, patience and risk management usually pay off a lot more than arrogance does. So admit what you don't know up front, and that'll protect you from getting too overconfident and betting a huge amount of money on something. And then if it goes the wrong way, you lose a huge amount of money. So if you just admit to yourself that, I don't know exactly what's going to happen, that's going to help you a lot with risk management. The second rule I'll give for beginning investors is don't invest your grocery money. And so by that I mean, don't invest money that you urgently need. Because if you invest the money that you need, that's going to put you in a really tough spot as an investor. Because ideally you want to be patient and not, panic when a stock goes up or down. However, if you're taking your, let's say, $800 of rent for the month and you invested in a stock and you think you're going to have $1,200 at the end of the month, well, if that stock goes down to, let's say, $500, now you're in a really tough spot because you still have to pay your $800 rent, but now you have to sell the stock when it's gone down, which you would preferably not want to do, and you have to come up with $300 more to pay your rent. So we all have expenses of, rent or house payment, groceries, gas, other things like that we need to pay for every month. And you don't want to be investing that money because it puts you in a really tough spot where you can't be patient and you can't afford to lose that money. So ideally you want to invest money that you don't need for a long time, and that way you can be patient. And if you don't have enough money to make a ton of investments right now, that's perfectly fine. And that's part of being smart financially, is knowing when not to invest just as much as when to invest. My third rule for beginning investors is to be an owner and not a trader. And this kind of ties in with my first rule of admit what you don't know. If you're a trader, you're trying to, time the market and go in and out of stocks before they go up or before they go down and make quick profits. And being a trader is just not sustainable because it's relying on you basically knowing the future, and especially in the short term, that's just incredibly difficult, if not impossible to do, especially in the stock market. It's a lot more valuable to be an owner than a trader, because as an owner, you can find high quality companies and leave your money with those companies and they'll do the work and the productivity for you. And it's a lot more consistent and predictable and a lot more valuable, as opposed to just trying to time the market and get in and out as quickly as possible. You're able to be patient and just stick with a business for a long time and let them sort of compound your money for you. And that's the best way to invest. I hope these 3 rules help you out in the future. If you like the video, give it a thumbs up. And if you have any questions, leave them in the comment section below and I'll be happy to answer them for you. And I'll see you in the next video.